welcome to another exciting episode of Economic Imbeciles destroying the lives of millions of people with their stupidity. The star of today's show is Turkish President Erdogan. You see, the Turkish president has it in his mind that lowering interest rates is the way you fight inflation. Here's a hint, it's not. And anybody who tries to explain that to him gets fired, just like 6 or 7 different heads of Turkey's central bank over the last 24 months. He's fired them one by one. And even as inflation continues to get worse and worse, he still won't change course. And he even went so far in January to fire his statistics guy who wouldn't lie about inflation. Fire the statistics guy until the numbers say what you want. Why didn't I think of that? Now look, while I joke about this, you have to understand, folks, this is the lives of millions of people getting harder and harder. And with that, we are going to shrink my big melon of a head. And you got to see this story. Turkish inflation soars to 73%. The highest since 1998. This is in Reuters data just a few days ago. Turkey's annual inflation rate jumped to a 24-year high of 73.5% in May, fueled by the war in Ukraine, rising energy prices, and a tumbling lira, though the figure was slightly lower than economists had feared, so they have that going for them. Inflation has surged since last autumn when the lira slumped after the central bank launched a 500 basis point easing cycle sought by President Tayyip Erdogan. Now with inflation at over 73%, surely Erdogan and his bankers are now changing course, and they've realized, hey, it's not working. This is not working. Inflation keeps getting worse. But no, Turkish lira slips again, and Nebati says rates to stay put. This is dated just today in Reuters. Turkey's lira slid to beyond 16.55 against the dollar on Monday, bringing its losses to more than 20% this year due to concerns about a surge in inflation to a 24-year high, and the finance minister's promise that rates would remain steady. The lira shed 44% last year and has been the worst performer in emerging markets for several years running, due largely to economic and monetary policy concerns under President Tayyip Erdogan's government. And here is what that looks like, folks. This is the performance of the Turkish lira going back to 2021. And let's zoom out here, going all the way back to 2007. Down, down, down we go. This is the lives of Turks getting miserable under this government. But zooming back in here, I want to point to this time frame here back in December. This is when the KKM Plan was announced. Now, you see, we bottomed out here around December 19th, and we had a nice rally, but the lira has since given back all of its gains. Now, you may recall back in December 21st, I put out this video about how President Erdogan's KKM Plan was absolutely doomed to failure, that it wasn't going to work, it was a terrible idea, and that anybody who invested in that plan was going to get ripped off. Now, under the KKM plan, Turks were encouraged to trade in their dollars for lira and then lock those lira into an account at 14% interest for anywhere from 3 months to a year. So it was basically a CD. That's really all it was. Now, in order to entice them to give up their dollars in exchange for this lousy investment, Turkey had to guarantee losses against the dollar. So if the lira lost value against the dollar, the Turkish government would make up that difference in addition to that 14% interest. So basically what they were promising was a risk-free 14% return. And what do we say on this channel whenever somebody offers you a risk-free 14% return? Run away! Run away! Run away! Yes, run away. There is no such thing as a risk-free 14% return. It does not exist. Well, at the time that KKM plan was promised, inflation was 44%, and they promised you a 14% interest rate if you traded your dollars for their worthless lira. And they said that don't worry, because by the middle of the year, we're going to have this inflation problem under control. Well, fast forward 6 months, here we are in June, and inflation is now 73%, almost double the rate it was when they came up with this stupid plan. Now remember, this KKM plan only offered protection against the lira losing value against the dollar. It offered no protection against the lira losing value against stuff. So even though these KKM account holders are going to get compensation for the losses against the dollar, those payments will not even begin to make up for the rate of inflation that Turkey is now seeing. So these KKM participants are losing a boatload of spending power on their money. And where is Turkey going to get the lira to pay all this interest? And where are they going to get the lira to make up for all this downside in the lira? Well, there's pretty much 2 ways where the Turkish government can get lira. They can tax it or they can print it. So the Turkish government is going to have to run the printing press in order to make up the value that the lira has lost against the dollar, and that's going to cause more devaluation of the lira. But wait, this gets even better. Shrinking my big melon of a head again. Turkish reserves lost a shocking $4.8 billion in just 1 week. You see, what is Turkey doing with those dollars? that the Turkish citizens gave them in exchange for that stupid KKM CD scheme? Well, Turkey is taking its citizens' dollars and they're dumping them in forex markets to try to devalue the dollar and prop up the value of the lira. And here you go, 4.8 billion of those dollars was dumped back at the end of May in just 1 week. And what did it accomplish? Nothing. The lira has continued to fall. Reading from this article in Bloomberg on May 20th, Turkey's gross foreign currency reserves fell the most this year, providing further evidence that an effort to support the lira is coming at an increasingly steep cost. The stockpile shrank by $4.8 billion in the 7 days ended May 13th, according to central bank figures published on Friday. That brought total holdings, which exclude gold reserves, to a 10-month low of $61.2 billion. See, the Turkish government is dumping all of these dollars that it got from its citizens to try to prop up the lira, and even that is not enough to shore up this failing currency. Turkey is looting and bleeding its citizens dry to save this currency, and it's not working. The wealth of this nation is going up in smoke, folks. So Turkey's central bank reserves are somewhere down around $60 billion left, and the kicker is, this summer, there's about $30 billion worth of those KKM accounts are going to mature. Remember, they had to lock up their money for 3 to 12 months. Well, most people apparently chose this 6-month option. And that means from July to August, there is $30 billion of those accounts will be eligible for withdrawal. Now, any Turkish citizen that owns a 4-function calculator will be able to do the very simple math and realize this KKM account is a lousy investment and that it's not working. And those people are going to withdraw their money from those KKM accounts. And the Turkish Central Bank is going to have to give those people their lira. And what do you think? Amid 73% inflation, what do you think those people are going to do with their lira? They're going to dump them for euros or for dollars or for gold or for Bitcoin or who knows what. Which means the lira is in for a really, really painful couple of months. And the only way the Turkish government can slow that bleeding is by dumping what little dollars and euro reserves it has left to buy lira to try to prop up this currency, even as its own citizens start stampeding for the exits. And again, there's $30 billion eligible for withdrawal. Most people will probably withdraw that, and the Turkish Central Bank will have to use almost half of its remaining reserves to try to prop up the currency as that happens. Now, Turkey is a pretty extreme example here, obviously, with 73% inflation and an absolute imbecile in the form of Erdogan running things in that country, someone who has fired all of his statisticians and all of his central bankers to replace them with sycophants who do whatever he wants without any second thought. But this is a preview of what things could look like if we get widespread currency collapse. It's starting in Turkey, it's happening in Lebanon, it's happening in a lot of these smaller countries, but this very easily could spread to the West and to some of these major economic powers as inflation becomes a problem and economic illiterates and academics and Keynesian economists who have been running monetary policy worldwide for years continue to debase currency in order to prop up a failing debt system. I don't know how much longer they can keep it up for, probably longer than most of us would guess, but eventually this bird will come home to roost. And when that happens, you want to be your own central bank. You want to be holding physical gold and silver. And yes, cryptocurrency, even though we're in for crypto winter. These are all ways you can protect yourself against economic imbeciles like Erdogan absolutely destroying the lives of people by the millions. And if you want to know a little bit more about this cockamamie KKM scheme that President Erdogan has come up with, you can check out this video that I did back in December where I said it was a stupid idea and it wasn't going to work. And here we are. It's not working. Till next time, live small and dream big.